But it was recording. If it wasn't, yeah, okay. So now we're back on recording. So the first step for those who are zooming in is we created again. Let me share the screen again. We created the new item called Megillas Rus. Some of you might notice that I have over here across the top a ribbon of icons, which you didn't have. And that's actually something, let me dot this to my bottom over here in a second. How do you get that? You go to view top icon bar. If I undo it, it's going to disappear. Actually, it should disappear. Let's see, view top icon bar, cut it out. Hide icon bar. Okay, that disappeared. It's going to go off. So we have here the menu. And if you go view and we do top icon bar, you're going to have over here a list of icons. For those who recall in the first class, I had mentioned, not only in the first class, actually the first class of actual QuickBooks and multiple times, there are many ways to do one thing in QuickBooks. So for example, to go to Vendor Center, you could go to the vendors, to the menu bar, Vendor Center, and you go to vendors. I'm just going to show it. Then there's another way. We did company homepage. Company homepage. Again, company. Okay, we're doing company drop-down homepage, and we get to the homepage. And then you could choose all of them, vendors, customers, or employees. So to get to centers of customers, vendors, and employees, I can either go through homepage, or in every case individually, I go to vendors, vendor center, customers, customer center, employees, employee center. And there's a third way, which is you click on the icon. So you should have the customers, reimagine your customers, you'll get your customers. Some people are picture oriented, and it's one click because you don't have to go to customers and drop down. It's a one click. By company homepage, it's company homepage. And after homepage, you got to, so really company is 3 stages. You go company, homepage, and then you select who you want. Customers, vendors, employees are 2 stages. You go to whichever one you want, and you drop down one. With the icons, it's a one-click shop. Customers, vendors, and employees. I go vendors, I'm here. So now we finally learned the third way how to do things in QuickBooks, all to get to a center. You want to get the customer center? There are 3 ways: through the menu bar, through the icons at the top, and through the home page. And keep this reference. This is all good information. If I give you all varied information at one time, it's going to go in one and out the other. So I try to sprinkle it around a little bit. And hopefully, if you have any comments, we're open to feedback. And let's see over here. And again, be specific. Okay. Good. So I see over here, someone had a computer issue. I also had some connectivity. I'm actually, if it's a little choppy, hopefully it's not. It's because I'm using the hotspot from a cell phone to a computer and another computer on that as well, because I'm trying to make sure I see what you see. But hopefully it's doing good. So, now that we're like 20 minutes into the class, so those need a review should please refer to the video afterwards. Let's see, cost of goods and inventory assets. So that's from Mr. Anonymous. Inventory asset is what we're going to do right now. We're going to buy from Machar Yishalayim. We're going to buy 100 Megillas Rus, because obviously, how many people are really, the percentage of people that are up all night doing the tikkun, the wannabes and actually go out and buy one, or you have one already. But Megillas Rus, we have new people coming into the shul. We want to have something to hand out. We're very welcoming. And, so obviously we are not really giving it away. We're taking it to a lower priced item and we could sell it to more shuls. Maybe there are some people that don't need to Megillas Rus, but they need a Megillas Rus, especially being that we said soft cover and it fell apart and they want to replace it. So let's do over here that, what are we doing? Last time we did vendor and receive items and enter bill. We did it at the same time. We the truck, we said the delivery truck is outside. Hey, you want some tikkun l'shvuos? Take it, and we enter the bill. So let's do a little variation of that. We're not going to do enter bill for received items because we didn't receive it yet. Let's assume we're going to do receive items. Let's see how this goes. Receive items. And what are we receiving? Because right now we're going to receive from, you're going to create Machan Yerushalayim. So I have over here, you could create the person, just type it in. Machan Yerushalayim. If you're going to go tab, after you type in tab, and it's going to ask you the same drop-down menu. Who are you adding a name? Is it vendor? Is it customer? Is it employee? And you're going to select vendor. Today's date, the last time we met was in 5/25. So I guess QuickBooks remembers the last time we were in QuickBooks, or even more so, remembers the last date you used. So in the previous class, when we put 5-Glick to 2019, and then people who weren't paying attention when I said previous T for today, like I can do now T and get it 527, they were entering their purchase for last time in class for the tikkun l'shvuos from 2019, and then when they made a report for the year, it's not matching up because their expense and their sales are coming in 2019, 2020. So please pay attention to what we discussed in the class. And when people ask questions, also pay attention. It's not the time to zone out because most likely someone else will ask the question 2 minutes later. So we have over here Machan Yerushalayim, date's 5/27, and I'm going to put in over here. Watch this. I'm going to put in. I'm skipping total. I'm going to put in 100, as we said, 100. Okay, the quantity. We do item is, as we said, is MR. MR is Megillas Rus. The quantity is, let's see, if I click on it, will be 0, right? I have 0. I shouldn't have any. And the answer is I do not have any. So close this. Now, if you noticed, there's no description. And you know why there's no description? Because we said there are 2 types of descriptions: description of purchase and description of sale. So when I sell to a customer, we created a description, but we left blank the description of purchase. I'll show you again. We went to lists, and for those who are following again, lists, item list, and we went to MR. What do we put in MR? We only put in Megillas Rus when I sell MR, it should show Megillas Rus. But when I buy it, it doesn't say. And what happens if I'm buying Megillas Rus and I'm buying something else which has to do with MR? Well, obviously I have to have MR1 or MR2, or I'm going to have MR with another letter. And in order to not confusion, you want to make sure in your purchase order, you can also do Megillas Rus. There's no reason for it. Maybe, when you purchase from someone, you're saying, I only want Megillas Rus. It's obvious. When you're selling it, you want to maybe say Megillas Rus from here. MR will be Machan Yerushalayim as opposed to Megillas Rus. So this is Megillas Rus MR. And then you'll be able to differentiate between one and the other. When I put in the order to Megillas Rus, let's see, this should hopefully correct what we did before. So we're going to have the purchase order Megillas Rus. When I sell it, Megillas Rus Machan Yerushalayim. In case there's another competitor, I know I'm keeping track. So let's see again. Close. And let's go back to our create item receipt. Let's see, MR. So description. The answer is this is item receipt, it's not item purchase. So that would have been good in item purchase. I'll show it. Anyway, I'm going to put in 100. And the answer is it's going to cost me $100 a piece. And I'm going to press save and close. What's going to happen is we go back to item list, which was before I click save and close, I'll go look at my item list. Again, we go to lists and item list, or I'll go to my window. It's another way to do it because in window, I have item list as one of my options. And for those who liked QuickBooks Online, you don't get this to have multiple windows open the same way in QuickBooks Online. And you have over here total of 0. There is a total of 0 because we don't have any. But when I go back to my create item receipts from Machan Yerushalayim and press save and close, What? Now we have 100. So this is how QuickBooks tracks inventory. You got to tag it. If I go now, what's going to be my on hand? My on hand will be 100, and I cannot change it. This is, people ask, why you get one chance? You get one chance to enter it before, right when you create an item, before you make a purchase or sale. That's how you get item on hand, and that's not changeable unless a backwards way from some journal entries, which will be in an advanced class after Shavuos. For right now, what we did, we created another purchase of an item, of an inventory item of Megillas Rus. And now I'm going to do a purchase order, just to show what I did before. Create purchase order. And then I'm going to pause, and I'll do it a second time so people can see. For those, the faster among you will do it, and those will the review. I'm going to go through steps again. I'm going to do Mechal Yerushalayim. I'm going to put in MR. Now my description shows, again, MR. So obviously that didn't work what we said before. We have to troubleshoot that because usually, sometimes it's supposed to work. Let's see here. I see Q&A, some comments. Again, why they service of the sales income and part of the sales? You could give any name you want. I said, if you want to, when you have merchandise, there's a cost which you got to put out. You got to, whether you're buying that on the spot or you're getting your credit, you have a liability when you buy it. In addition, you have storage. So your cost could be a number of things to generate business. You might want to have two divisions of your business, the merchandising division and the services division, and you want to see if the expenses associated to the merchandising is justified with the revenue. If you have a lot of costs, if you only have a minimal sales income, which would be actually, if you have minimal sales income and a lot of expenses, you want to see if those expenses are attributed to sales, maybe don't carry those items. But if you put a one big number, yeah, we did great, we did $1 million this year, maybe most of it was service revenue, and you're losing that revenue because of the cost of goods, especially when they get devaluated, and there's a long holding time. So, that answer that question. No, the cost was $1, I believe. The sales was the $3. And we'll go back again. So we go to lists, item list, and we go to our inventory part here. Okay, so the answer is that I did the reverse, right? That's what was showing up. The purchase order is Megillas Rus only, and the sales transaction is MR. So that was my thing. I set it up correctly over here. So we're going to see by the sale, it's going to come up Megillas Rus MR, even though the purchase order only shows Megillas Rus. So that did come up correctly. Okay, so we have here, and then they asked, what's the cost? The cost is only $1. The sales is $3. The average cost is $1. If I would get another 150 cents, my average cost would be 75 cents because it just averages 100. If the total cost would be $150 and I have 200, my average cost will end up being 75 cents. That is what inventory is. And we said inventory is not an expense, it's an asset. I take some cash and I turn it into inventory. Cost of goods is recognized at the sale. That's what we said. Cost of goods recognized at the sale. Because when I sell one Megillas Rus and I no longer have it, now is when I realize the expense of the dollar. Not before. I still had the dollar, just not in cash. It was another item of value. For those who remember the slides that we had in the first class, and posted, and we could send it again, assets are articles of a value that belong to a company. And that could be cash, that could be building, that could be inventory, things that you make money and you sell. A roll of toilet paper is an expense because it's being flushed away and it's gone. Unless obviously you are in the toilet paper business, then it is your inventory. Okay, I'm pausing a second to get people to catch up to. Okay, for those who already created a purchase we received 100 Megillus Rus from Machane Shalem. How did we do that? We had vendor, we received an item, and now if I would go to MR, doesn't make a difference who it's from, because I got two companies selling Megillus Rus, right? When I buy it, that's just a Megillus Rus to me. I'll cook it. Now it's going to show me I have 100 because I do have 100. That's what I received. But prior to if this is the first time you do an entry, your answer will be 0. The cost is 100, and this is now the first time I did MR, I did nothing in the description, so it was 0. The description was nothing. Then we added Megillus Rus to purchase, and now we have a description of Megillus Rus. We added Megillus Rus MR to sales, and we're going to see it will be showing us as Megillus Rus MR. This is things that, little by little, you get the hang of it. Again, when you have no quantity, by default it's 0. It's 1, because why would you received 0? You keep 0, then you got nothing. And it's 0 times 1 is 0. If I put 2, the answer will be, again, $2, right? 1 second here, we got it. Yeah, 2 times 1 is $2. And if I put nothing, the default is 1. And that's why it's another fast way of doing entry. If you have one person coming in and have multiple people buying one item, you don't got to bother entering given quantity. The assumption is it is 1. You just do MR, Megillus Rus is filled in, cost is there already, and you just type in MR, Megillus Rus is already there. The 1 is there, the 1 and the multiplies by 1, and you just can pick a company. You might come to Makaras Farm now and say, I want to get from them another 50 because they're running a sale for 75 cents. So I just, on the fly, I'm putting in, I'm overriding 75 cents because that's a sale, and now it's only costing me $37.50 as opposed to $50. Actually, let's do it. Leave it 100 because I want to show you that an understandable average. So 100 at 75 cents. 100. Actually, we said 150 cents. That's what we wanted to do. 150 cents. If you believe it or not, did I change the cost to the MR? A lot of times I'll ask you, you're entering a new amount. Do you want to update it and change MR? No, I got a deal. So I am not changing the general cost to MR. Right? MR will still stay at $1. Is the price. But Makaras Farm is liquidating and selling me as a one-time deal for 50 cents. So that's what I'm doing and buying it. So I'm going to say, no, I don't want to update it for 50 cents. Perhaps an hour before Yom Tov, it will be even cheaper, but I'm not going to change it because next time around, it's going to be still $1. So I'm not updating it. I'm leaving it at 50 cents and I save it. So now with the 2 items, save and close, watch how inventory turns to 200. That makes sense. Inventory is 200 because we have 200. We got 100 from Makaras Farm, 100 from Machane Shalem. On hand, we have 200. But now you see, our average cost is 75 cents. This is what I says perpetual inventory. Perpetual inventory means we always average what our cost is. What is the difference? The difference is if I would make a sale after buying Machane Shalem for $1, I would recognize right away those things as $1 expense. But before I made a sale, I already brought in a new batch of 50 cents. So then there are multiple ways how you do it. You say on the first 100, it cost me $1, and the second 100 cost me 50 cents. That's called FIFO, short for first in, first out. Whatever came in first for $1 goes out at $1. Then there's LIFO, which is last in, first out. And that is, I'm going to make believe or I'll convince myself that whatever I'm first selling what I bought for 50 cents or $2, I made $1.50. That might not work because you'll be counting, you'll think you have too much profit, but if you get stuck with 20 items at the end, you say, oh, those items only costed me 50 cents. But it's not true. It really cost you $1 because you reversed the method. So QuickBooks just uses average, and that's what we're going to use for now. And now we're going to make a sale. Let me check again if people had trouble doing this last item that I just did. So the way I added inventory is I didn't go to lists and item list. You can't adjust it there. When you go to lists and to adjust the inventory, that's only on hand. The first time when you create the inventory part, that is when you could put what we have. After that, it gets, now you could put a reorder point, that's a reminder that this is about where the TLS, when I drop below 10, remind me, I want to make a reorder because it's not good for business that people come in and say, oh, you ran out of it, you offered a sale and there's no more left. So you're going to put in a reminder when QuickBooks keeps track of the sales. You're not going to remember that. You're just going to pull off the shelf. But if you are entering your orders into the computer, then QuickBooks will keep track and tell you right away, you're running low, make a reorder. And the same thing is a maximum. You could say, I have too much. So when you're going to get a purchase, say, whoa, don't buy so many, you're overstocking. So there's a minimum reorder point, there's a maximum purchase point. Those are two other fields which you can learn about. But when I made a purchase or I entered receipt, some people who did not have the accounting version software didn't have it. But we had over here, let's say receive items, and I put in, again, vendors, receive items, and I went to TLS, so it doesn't make a difference what any item that's inventory, it brings me quantity, a little box, which I click on it and tells me what I have. I still have 45 TLS. I still have, if it was MR, it'll still show me now 200 instead of 100. So you could see your inventory count as you're doing purchases, or you could see your inventory count as you're going into the lists. I still have open list, item list, and it goes right over to 200. Okay, I believe we're about to go over to the sale, and that will be the end for today's inventory. Okay. So this is the 820 questions. I think Randall was asking about add the item. You always create a new item from the lists, and then you add the reorder, the purchase, either one of three ways. Either when you're going to create a purchase order, you're writing that you want to purchase something. And when you do a purchase order, you're going to say I want MR, and I have a quantity. If I'm going to put, now I'm going to run through this. Okay, we're going to run through this. I hope I'm not losing you. I'm going to put a maximum order at 210. Let's go back to lists. I say create vendor item, create. Where are we here? Okay, I probably close that one. Create. Let's go to lists. The item list. I'm going to put under my TLS a maximum of 50. I don't want to have more than 50. Okay, so I'm going to put in maximum 50. And then I'm going to put on my Megillas Rus a maximum, minimum of 50. That means if I run under 50, if I run under 50 MRs, if I get less than 50 Megillas Rus, the computer will remind me, make an order. For example, if I'm going to sell to someone 151, right? I'm dropping on the 50. The computer should say, whoa, gotta make another order. Yeah, I still might have. I can still make sales. I'm not running, but quickly get in the order. And the same thing if I'm going to buy more than 50 TLSs. Now, we once had 70, if you recall. But now it's close to Shavuos. I don't want to have too many. So I'm going to put it. So we made a maximum of 50, right? This we have in the same item list. We're editing MR, minimum of 50. Okay. And in the TLS, we have a maximum of 50. Okay. Do this minimum and maximum for yourself. And I'm going to see if there's a question in the meantime on that. Okay. So again, this is the one with anonymous asked about the star, without the star. Right now today, I'm choosing the non-star. You cannot have two of the exact same names. Just like you can't have a customer and a vendor the same name, even though sometimes he's being the role of a customer and sometimes the role of a vendor. So you have to make a character distinction. Anything, put a star at the beginning, at the end, a period, anything to differentiate the name. Okay, of course, we create Machan Shalim, create Machan Shalim yourself, and you add it. That was that. Okay, so okay, let's see what it is. Just dismiss something. A purchase order can be canceled. Purchase order is not a commitment. I put on the order, it's like a sales order. Someone calls in and you create a sales order like you're about to, and the person says, you know what, I decided, arm's length, you could cancel, especially if it didn't go out yet. You could cancel an order. Same way, if the customer cancels on you what you made as a sales order, then you cancel to someone else what's your purchase order. Okay, let's see here. So we answered what was the cost of goods and inventory. We answered this question. Okay, so you're right. Received items that I didn't pay for. Well, right now we're analyzing the inventory. We're focusing on inventory. I don't want to get. That's why I don't get distracted. How much do I owe Makari Shalim? How much I did this today? I'm just showing how it works. How inventory goes up when you take more. How inventory will go down. How inventory tracking makes sure you don't have too much of one item or too little of an item. This can be especially in higher priced items. You want to get overstock and then have to sell it sometimes at a loss just to take off your hands. Oil was being sold to futures for June at losses because nowhere to put it. You ordered big, boxes of hot cups on sale and they're so bulky, and you ordered 100 by mistake instead of 10, right? You don't want to do that. Where are you going to store it all? Okay, where do we have need to receive items? So that answered that one. So I'm starting to read out the questions of people. Where did I input 100 MR? I did it directly. I could have done it two ways. This is anonymous. Where do you input 100 MR? You don't. It happens by itself when you purchase something, either by receiving and entering a bill. So here, this is where you item receipt, and it's actually we get out of this one clear. Get out of this one. Again, we had vendor, receive, item, enter, bill combined in one. And it doesn't look much different actually from the other screen. They're asking if it's billable to who. Sometimes you receive it, but you bill it to different. No, we'll get to other parts of that anyway, another time. Or you go to vendor, receive items. And yeah, you would enter bill for received items. So why would you receive an item and then enter a bill for received items if you could combine it in one? And that's what the first choice is. They assume the first make a purchase order, and then you would combine an item, a receive item, and enter bill. We're going to see the effects of doing one over the other. I believe we finished the questions that were current now. Anonymous says, I didn't put in on hand by MR. Perfect. We said we're not doing anything. We only want it to be changed. By TLS, we added in 30 that we had in the beginning. MR, we did nothing. We just received 100 from Shalim at $100, at $1 piece for $100. We received 100 from Makaris Farm at 50 cents for $50. And we're going to see that in the report soon, but I'm going to get past one sale first. We're going to get a wholesale distributor. Watch this. I'm done. Okay. If QuickBooks has today's date, that's what, so Sam Alt is very good. That's what belongs. The purchase order, I just started and I did nothing. I pressed, and I'm sad that what I do with the purchase order, I didn't do anything. We just have the 100 that we bought from Makaris Farm, the 100 we bought from Shalim. Okay, can you please send all this? We'll do this class. We are only doing one more step is making one sale. So it was actually 3 transactions. Adding one more, we created one more item called Megillas Rus. We bought from 2 different vendors 100 each for different prices. And then we are going to sell. And I'll give a summary. With Hashem, we'll be able to give those steps in classes previous. Okay. Okay. I'm taking a pause for Mr. Gold says, when do we enter? I'm the running commentary. So instead of having a dead space, I do a transaction. Some people do it, and then I'm just discussing and filling the time. No, we did not, Mr. Fatikov. We did not do the purchase order. We just showing a different chapter 3. We're gonna do a quick review. After by 9 o'clock, we'll do a review from 9 to 9:20 about. Then we're gonna have this quiz running online for about 25 minutes, and then we're gonna have Q&A. Okay, can we go? So this, whoever understands everything and they did the poll, and they're free to go, and those that have questions stay for Q&A. So that's regarding that. So everyone keeps for Raven. Everyone's asking, we did not do the purchase order, and probably you. I'm catching up here. Okay, after you add, we go to create 2 purchases, or receive it twice. Receive 100 from Echon Yerushalayim, receive 100 from Karas Farim. The prices are different, however. Echon Yerushalayim is the default, which is $1, and Karas Farim is the default 50 cents. No, so the answer is no. Your cost is no longer $1. That's what I explained, the difference in inventories. This is for Muna. If you buy for $1 and then you make sales, your cost when it goes out is $1. If you buy for $1 and then you buy for 50 cents, and now your cost is averages out at 75 cents, your new cost is 75 cents. That is what average inventory is about. Okay. Let me answer that. Okay, so we'll do it one more time. And for those who want to know how I got my icons up here, I went to View and Top Icon Bar. And I actually took away the left icon bar, so now the screen is fuller. We did like this, we did vendor, receive items. After you create MR, we receive items, and we create Machon Yerushalayim. And if you didn't have it, you would just type Machon Yerushalayim. Spelling mistakes doesn't make a difference as long as you get a name for a vendor. The date is today. We typed in MR, and we put in, Megillah just comes up automatically because we made that description for the purchase. And I put in 100 quantity. And for some reason, it's putting the cost at 75 cents because I'm not even sure why. We'll have to go back and see. But right now, we put the cost for, make sure the cost for MR, oh, yeah, we changed. Okay, yeah, we're leaving it for the new cost. This, if you went to 75 by mistake, I must have pressed yes by mistake when I was starting first order. Make sure that only when your cost is, whoa, it's $10,000. Well, that's not what I wanted. Okay, no, $1. Okay, only when you see that your cost is $1, that's when, and it gives you the message, you changed cost for MR, and you say, yes, you're updating it, because that's what you want it to be next time. In my case, and then you press save and close. But make sure before you do that, that you don't have zero, your item is 0. In my case, I have 200, so I'm not going to save it. I bought 100 from Machon Yerushalayim, then I bought 100 from Karas Farim. So before you finalize and press save, and it's going to update your on hand to 300, you don't want that to happen. So double check on this little box and check your inventory. If you're using a different software that does not have that little box menu, you could do a manual for now to see how you could get it in that software. You would go to view item lists, and lists an item list, item list, and you would see what your on hand is here. So again, the accountant has a feature where you see it right in, as you do it, and that's created by default, but you could also find the same information. You're not all completely lost. You'll get your item list. So therefore, since I know that I only do 2 times 100 is 200, so I know I'm not completing this purchase. But you know what? If you, yeah, so this is, I'm going to press clear. And after you save that one, you're going to go to Makaris Farim, and you're going to put another, again, MR for 100. Wait a second, you put MR for quantity 100. And you're going to change it again to 50 cents. I said it has to be 50, not 75 cents. 50 cents. And the answer here is no. I am not updating the item. The item will stay at $1. What I am updating the item to is no. It's only for this invoice. I got a sale. And you're going to press save and close. But before you do it again, either you click here and make sure you only have 100, because if you have 200, you will not complete the purchase. Or if you don't have it, you would go to lists, item list, and see what we just did, and you see it's still 200. So I'm just demonstrating how you would theoretically, if you didn't enter it yet, you press, I'm going to press clear and close. Okay. Now I'm going to double check why before it told me get rid of the purchase order, clear it out. I'm going back to my item list. Okay, it's not going to change. Okay, now we're going to make a sale. We're coming to, now, like I said before, we go through the icons, we go to customers. We're going to have one of our current customers, Chaim Yankel, or Mr. Gabi. Mr. Gabi is a busy guy. He's by Shabbos. He tells us, I have so many people coming, just give it to me. I'm going to move it. It's Erev Yom Tov. And I'm going to create an invoice, which is Control I. Control I, and I'm going to sell him 151 MR. I'm sorry, 151 MR. Can I do that? Let's see, 151 MR. It says yes. Costed $3 a piece. It's $453. It's invoice. And I'm going to press save and close. What happens? Now, if you notice, remember, MR is even though I really have a mix, because we have Mechon Shalayim and Karas Farm, but Mechon Shalayim is a publishing company in Eretz Yisrael. So when I buy it in Eretz Yisrael and they're making a special shipment, they charge me $1 because they're shipping it to me. And Karas Farm in America is giving me 50 cents, however you want to justify that. But when you sell MR, it could be it's the same item, and it says MR. So now you know how you have the, one description of what a customer sees and one description of what you see as a purchase. And press save and close. And for some reason, there's a spell check here, so I'm going to ignore all for whatever reason. Ignore all. And guess what happens? I go to, how much should I have left? If I had 200 and I sold 151, I should have 49 left. Let's see if that's what it is. Okay, list, item list. And yes, I have 49 here. So it worked. It took our inventory from 150 all the way down to, and from 200 to 149. But the problem I have here is, it was supposed to remind me when I dropped under 50. And it didn't. I only have in hand 49. Why did it not send me a reminder? Right? So let's see. It's possible that when you make the first sale, it drops underneath 50. It's not going to, right? I started at 200 and I made one sale. It doesn't remind me to make the purchase order. But when I make a new sale, even for one, then it will remind me. So let's see if that theory works. Mr. Five-ish Glick comes and he's going to make a sales receipt, not an invoice. It's a sales receipt. And he picks up one. That was a right click, by the way, if it didn't know what I was doing. And I'm going to sell him one. I'm going to sell him MR one. Quantity of one. And it's not coming up reminder. So that theory did not pan out, all. So we're going to see. It's possible we turn off warnings. Okay, anyway, so but this idea, I sold 151 to Mr. Gabe. And don't worry, Mr. Gabe is going to come back. Again, people, how do you correct an invoice? He says, you know, I'm not paying $3. I'm taking so many. I want to pay only $2.25 and call it a deal. You know what? So we're just going to do that. Override 2.25, and it's going to adjust the calculation. I said, anytime in QuickBooks, it's a calculator. You could, okay, so what I actually did now is I did 3 things, and we're done for sales for now. We sold 151 to Mr. Gabi for Shem Shabbos for $3, and I closed it. Then I sold one to, it was Fiverr Glick for $3. And then I went back and I edited Mr. Gabi to $2.25 because he says, there's no way I'm paying the same price. I saw Mr. Glick come and pay for one $3. I'm paying the same price for wine. I need to get 25% off, which is more or less 75 cents is the 25% off. And of course, he still owes us $1,000. We don't get him upset because he has to pay us the money. His open balance actually is $1,465. It shows over here, he has one bill, which he bought 2 days ago for $1,012. And he has another bill from today for $453. These are beautiful features that you have in different softwares. How you could see, when a customer calls in, you see what's going on with them. These are things that you're going to have. And total balance, obviously, is the sum of last order and this order, which is $1,465. So we saw now that the reorder point of under 50 didn't help us, not when we dropped to Mr. Gabai or Mr. Glick. That not help. So we're going to leave that at that. Let's do a review of a report. Okay, so we're going to go to report, company and financial, and profit and loss standard for the year. Again, we want the year, not today. Automatically, it's going to bring us to this month. Some of the default you could create, you could customize your default. It's going to bring us to this month. So I'm going to press Y to get to the beginning of the year. Okay, I'm going to give a running commentary, but I'm not going to do anything more than I did before. So those who did not do what I did have a chance. We're not running away from you. For those who did not do, the running commentary will be a rerun of what I did. So you could watch it a second time, or you could do it for the first time. You could choose. And let's double check if there's any important question on this topic. Otherwise, I'll be able to move on. Okay. So if Rami's asking a QuickBooks Pro, I have to deal with other. I can't see a software right now, so I can answer the question today. But you could do. We could look into it. Okay. Again, Fataha, you are not going to make the MR on hand by yourself. It's going to be a direct result of your purchases and your sales. That is the point. If you have inventory that QuickBooks is taking over for you, they increase the inventory when you buy more or receive more. They lower it when you make sales. If you want to just adjust yourself at the end of the year, well, that is an adjustment you might have to make, which will run adjustments. What happens if one day you walk into your warehouse and you thought you have 200, as QuickBooks says, but you only have 190? That means 10 disappeared. What happened there? Is it a sale that you forgot to enter the QuickBooks? You sold 10 on the fly? Or is there someone carrying out and having a business on the side? Or 10 customers are taking a free gift to go? How do you know? Well, but bottom line is, you will have to recognize the expense because you are missing 10. So your inventory amount is not what it should be. And if you take out inventory, you have cost of goods expense. So that should hopefully answer your question. And we have number, I should have said a couple of times, you have probably different software, we have to figure it out. Yes, so Mindy's asking if we canceled, how do we post or remove from QuickBooks? I'm not sure if you canceled what. Please take the extra few seconds to be specific We're not using this as a quick social media chat. It's a question which I'm repeating, and hopefully I'll understand and be able to give an answer. And many people call in for because maybe they're thinking the same question. Okay, sale and sale order. Sale is what I sell. A sale is what I sold actually. A sale order is when I'm preparing an order, but it's not really sold. And we didn't do that yet. Okay, if you put in 75 pieces, a PC, and it's not a PC. If it's 75 cents a piece, just change it to 50 cents or $1. We have 100 at $1. We have 100 at 50 cents. So happens to be the average is 75 cents, but your two invoices should both be one for 100 and one for $50. Okay, I'm up to 846 questions. Yes, babe. But purchase orders we did not save. That's Mr. Anonymous. We did not save anything with purchase orders. Rachel's asking, it shows 100 on PO, not on the hand. PO, because you did purchase order 100. We did not do purchase order. Delete the purchase order and do the receive order. And that's probably what your issue is. And if not, repost. Thank you. How do you have 200 total quantity by MR? Anonymous is asking, how do I have 200? Because I received 200 and it's an inventory item. How much do you get 100? How much did I get 100 or more from who? I'm not sure what Shoshana's question is. It's 848. Okay, well, if you want to see what I did from the beginning, then obviously after class you could rewatch the video and you could see it and you can run it as many times as you want. It's not fair to the people to keep on going back to the beginning an hour ago and it's not going to go forward. So we have recordings, this time I actually did it after step one and then I redid it again. We have recordings to rerun. If you have longer questions, we have a good 40 minutes at the end for Q&A built in, factored in. We can answer many questions, audio, and quick questions I can answer as we go along. I hope this is going to be helpful so we could balance, we're doing with the larger audience and we want everyone to feel that they're getting something at a time being put in. And now, for those who are watching and not really being able to enter it in, what I will do at the end of the class is I will send out again the 5 transactions that we did, the 2 purchases for 100, and the sale for 151, the sale for 1, and then changing the price for Shem Shabbos. That's more or less the 5 things we did. And Cheryl's saying, I made a mistake in entering inventory amount. I duplicated both transactions. I'm not sure what you mean when you enter the inventory amount. If you made 2 purchases, you received twice from Mechanic Shalayim and twice from Cars Farm, then delete 1. So if you entered something at hand, then that will be an issue. And then for now, we'll have to deal with it separately. Okay. Emuna says, I thought the cost on the left side would automatically populate. How does QuickBooks automatically know what someone from the register is selling you in anywhere? It's not artificial intelligence, and even if it was, everything is subject to change. You have to make a few inputs. You give it again, we said you don't need a description. Theoretically, you can bypass description, but you need to have, okay, so we're running commentary. Okay, so it's just answering questions which are not new transactions. If I went to lists, where's my list item? List. And let's say I'm in my MR. The only thing you have to do is you got to give it an item name. Otherwise, there's no way to associate what you're doing or selling. You need to give a cost or sales because how can it track the expense of the item you sell and how can it track the income of what you sell? Because the difference between your cost and sales price is your profit. When you sell it, a dollar will be your cost, right? When you buy it, it's not your expense. When you buy it, it's an asset. So I'm putting my cost because when I make the sale, we'll say, okay, now that you don't have it, it's a dollar. It cost you a dollar, but you also made $3, and they'll know that your revenue was $2. Your revenue is $3, but your gross profit, as I explained, I'm doing the report, is $2, right? When you sell one, if you would look at the report, all my business was one sale for $1. Gross income will be $3. Cost of goods will be $1. Gross profit will be $2, right? That $2 change. And you can do this in tens and hundreds and thousands and millions, right? You sold for $3 million. Cost was $1 million. So your gross profit means after you take off the cost of goods is $2. Let me show you on the report. We had P&L, company financial, profit and loss standard. And we had here, right? Or probably was open anyway from before. So we have here the sales. Sales represents the sales of TLS, and MR, right? Double click on it. Sales is tells you that I have a memo right here. Where is the memo coming from? The memo comes from the description. If you give a description, you can see a memo. So that would be another reason why we have description, to keep track of when you open a thing. Why did Gabby give me $1,000? Why did Cohen give me $100? It's because you see it in the memo. And I see that my merchandise sales brings in $760, right? My service sales brought me in $2,500. Yeah, this is going through the year from Yanko Cohen and Chaim Yanko and everything else. I'm going to take a pause and put an R over here because profit and loss is the gap for the year. So I have from January 1, that's the Y, that's the beginning. The R from year is the end, that's 12/31. The sales income is not going to change, but it will change for expense, will be a difference because we have depreciation pulling in at the end. Cost of goods. So what's my first cost of goods? Right, it's really, you could merge it into one line item, or you give it names. Technically, it is a cost of goods category, but I could have had a cost of goods of TLS, and I could have a cost of goods for, give it different names. I have cost of goods TLS and for MR, right? If I double click on 70, this is my tick and low cost. The tick and low was on the asterisk one that happened last time. I sold several of them, doesn't say how many you sold, but it says that it costed you $2 a piece, and you sold 35 of them, right? So that's $70. Right, going down again, cost of goods 114. That's my TLS. My Megillas Rus. I could pull over here and I could expand report. You could pull and drag if you can't see everything it says. Or if you don't need so much space, you could shrink it, right? What I'm doing is I'm left clicking my mouse. Or you could even double click probably on the memo. This here, I double click, no, that doesn't help it, but I could drag it and make it smaller. However you do it. So left clicking on the divider will let you drag and make bigger or smaller any section. And again, we said double clicking on a number, and that's still saving, right? When you see the zoom, it means you want to drill down. Let me get a closer look at this number. What is a breakdown? That's when zooming into it. Double click again with the left click, and you see over here, right? The cost of goods cost you only 75 cents because you bought one. That was your average. QuickBooks takes the average cost method. And advertising costed $250. Meals cost me $120. We know that it was $44 from sushi and 70 right from Super 13 and 76 from Essence. And at the end we have office supplies and rent expense. Where is my depreciation? Again, this is for the year. Why didn't it pull up the year? Try again. Because they probably only, let's get out of this one. Except what you don't need too many windows. If it's bothering you, just keep them clicking X. Okay. The report has to be for the year. T, so you do Y in the left one and R in the right one. Or you just drop down the menu and you pick last fiscal year. It's all the same. Not last fiscal year, this fiscal year, sorry. Last year, that was 2019. This fiscal year drop down. And you get the same thing as if you did Y and R. And your depreciation expense for 240. And your net income is no longer going to be whether it was 791, 721. People are asking, where's it? It's always moving around because it was 791. I added 240, became 1031 because it was a depreciation expense. But now I had so many more sales of Sefarim. Then again, that was offset by sales income. It was offset by cost of goods. But then, if you recall, last time I had services. Hashem Shabbos spent by me. How much you spent for me? Rabbi Gabbai came in. And we had $800 of service. That brought me out, right? We had consulting, his invoice was only $700 of one service, $500 is $800. So even though his invoice is for $1,012.50, QuickBooks breaks it up. $800 is for service, and $1,250 is for merchandise, right? That's why if you're looking at sales income, Mr. Gabay is worth $800 because in this case, sales income represented service. And you look at sales income, Mr. Rabbi Gabay is worth $212.50. $212.50 on last invoice, right? Because he came today and bought 153, 151. Evidently, they did not save this. If you recall, it was supposed to be 225. So we're changing it to 225. And I did not save it. We got it. Be on top of that. Okay, ignore all spell checks. Right, so he's not, now because I changed it, it can't give me the report of, well, it updated before. It said 453 because the price was $3. But now it's telling me we got to refresh it. Of course, no problem, refresh it, will be the same thing. 339. So that's his worth 212 on last invoice. So that is an analysis of how you go through a P&L. It starts off with the revenue. You could, just want to know what was my, okay, let's get over here. Income was 3165.25. My cost of goods is the next step. So my gross profit. Then we have my selling expenses. So, it doesn't bite me so much the 184 because in order to make hundreds of dollars of sales I made six, here you got it right now. This is why I divide it. I made 655 in merchandise sales and it cost me 184. Did I make money? Yes. If I would have my cost of goods, because that's what it does, it tracks inventory cost of goods, but there's one sales number, I can't see in my report, did it cost me more than I made? So again, why it happens to be with sales income, but you can have merchandise and service. You could give the names, but here you see a clear practical use. I say, is it worth it? Yes. My merchandise cost is 184, and on that I make 655. It's worth it. In general, as a business, right? I have many more. I have profit to $2,900. So now there's two levels of more expenses: the advertising, which brings me money. I advertise, it brings me money, or lower down, happens to be alphabetical, but there's rent where the rent. Why does rent bring me money? I just happen to need an office where to make a sale. But what? And theoretically, you could say, well, with no office, there's no sale. But maybe I'll be in my car and make phone calls and get services. And my trunk will be my store for my sales, like some people do it, right? But you got to buy cost of goods and you got to advertise. So there are different levels. We're going to learn about accounts numbers, but right now we'll deal with letters. There's some people that have categories by numbers. Some people make it general categories by overhead, which is dead weight, and selling expenses, right? So you have the actual cost, you have the selling expense, and you have the overhead. You can make sections however you want, and then the subs. Utilities, that is gas, electric. So now we reviewed the P&L. I'm going to take another 5 minutes. Again, we looked at the balance sheet, customer financial balance sheet. And we see over here, I have 618 in the bank. I really have much more money because I sold so much. If I were to go to banking and make deposits, right? Bank make deposits, I would see that I have $3. Wow, from 5 years click, because a lot of sales were on credit, right? And Mr. Gabi didn't pay me yet, but I could deposit, and that's an undeposited funds. When I received the money, we discussed money not deposited is undeposited funds. Actual money in the bank is the bank. If it's not in the bank, it's not in the bank. You cannot write out a check against money that's not in the bank, but you can deposit that money and then write a check out against it. So you might want to prepare it in QuickBooks and just not give out the check. But in this case, it will be called you receive the payment, it goes into a category called undeposited or safe or whatever you want to call it, but by default it's undeposited. And then when you make it in the bank, it's removing it from undeposited to bank. And since we know we debit bank, right? Assets go up with a debit. So when I put money in the bank, it's a debit. So when I receive payments, I debit undeposited funds because that's where it goes, right? I debit undeposited funds. So when I transfer from make deposit, what am I doing? I'm taking the asset out of undeposited and putting it in the bank. We say to take away assets, it's to credit. So when I put money in the bank, it will be a credit to undeposited funds and it will be a debit to bank. And that's assuming it landed in undeposited funds. But if the guy wired it straight to my bank, it never went to undeposited. It went straight to the bank. Keep this in mind because some of the things we discussed, you're going to see in the polling. And don't take it personal. Please don't be shy. If we have, for example, if we have 48 participants on it, or actually 47, separate people, please let's get 47 responses. Just play the game and good sport. And if you need review, we have questions and answers. And especially if we have, you could always watch the class again with the handout. I want to just do one more item. I hope and I'm going to review it next time. I leave you something, we introduce it, and we reinforce the skill the following time. So if you recall depreciation expense, why did we do depreciation expense? We have here P&L depreciation expense is $240. We said because we had was an asset. If you go to balance sheet, we had an asset called a copier. The copier was in furniture. We didn't. If you zoom in, you'll see we have by company. We didn't put memo, right? But now you see the benefit of putting in. If by Office Depot I put copier, we would see it quickly in the memo. What's $1,200? I got to go Office Depot and dig up receipts. The whole purpose of QuickBooks is that you see it all in front of you. So when you put Office Depot, put in copy. You put in Amazon, you put in the memo computer, or it's up to you. So we had $1,200. We said we're estimating the copier will live 5 years. Everything beyond 5 years, more than 5 years, is a benefit. It's a bonus. But because you can't say I spend money on a business and it's tied up, right? I invested $1,000 in my business and I bought an item for $1,000 and it'll live for 4 years. You say you can't take an expense. The answer is yes, you could take an expense, but not in year one. It's not fair to the taxpayers, the people who, right? Because then you're going to say I made $10,000 and I bought a $10,000 copier. I made no money. Why are you recognizing a $10,000 expense? It's not lost. If you had a bad day and your inventory was damaged, so then you impaired the inventory, then you lost it on day one. But you have a copier, and therefore you break it up over a period of time. So we said we're going to make adjustment at the end of the year. That's why we put in 1231. It's an adjustment where we're recognizing an expense for 1/5 of the copier. Hence, we got an expense of $240, right? So, but again, for every debit, there's a credit. So if we have in the P&L, the depreciation is $240, How we entered it, that we could do again in Q&A, or you can ask me at a separate time. Once we have 240 as an expense, the credit is what it's doing is reducing the total value of the copier. So go to balance sheet, and in the balance sheet, you'll see that we have what's called accumulated depreciation, but not as of today. If you look as of today, it's nothing. This is an end of year adjustment, or end of fiscal year if you have a mid-year adjustment. So go to, we're going to R. Good, end of year. Wow. Now we have furniture and equipment, still the same value, but there's a negative 240 reducing it. And I explained the difference between a tangible asset and an intangible asset. When it's a tangible asset, on one hand, we want to recognize expense, and we're reducing the value of the furniture, right? It's a negative. But the furniture still physically is here, so we keep the full amount here. We don't say, okay, now the furniture is not 2,079, it's 240 less. Yeah, we had the 240 expense, but we still have the physical shell of the company. Sometimes you have, it exists in shell, there's no spirit. You have a car is here, it's dead, but the car is here. So the item is here, and there's a negative against it. When we junk it, we remove the negative, and then we remove the item. So that's what's intangible, because physically it's here. But an intangible thing, as let's say a patent on something. The patent has a value. If someone infringes on your patent, you could sue him for big bucks, right? And if you had the patent for what's going to make the coronavirus, oh boy, you're going to make money. But it's intangible because you can't touch it. There's nothing you can point to. Yes, it's protected, but it's intangible. And the intangible assets are good for 15 years. So then there you're not going to have accumulated depreciation on that. You're going to have whatever expense you took out of the 15 years. If it was $15 or $15 million, every year you take out one and you reduce the item itself. This we're going to do a greater length in next class about depreciation or payroll. And why am I saying this? Because just like at the end of the year, we have to recognize, take stock and say, 1 second, it's 1 out of the 5 years are over from the copier. Now I got to recognize expense somewhere, right? Especially if you talk about big money. If I bought a $10 million machine, if I don't recognize any expense, I will pay tax on all my revenue, even though I tied up my cash and have no money, right? I can't wait to the end of 10 years and say, oh, well, this year I had $10 million expense on my machine. It's not fair because I tied up the money in year number 1, and there's a time value to money. So at the end of year 1, we recognize the expense for that year. So too, on other assets or supplies, we said there are 2 ways to do it. Either when you buy your Nest paper for 177, you buy bulk items which are technically supplies, and we put it as an expense, right? It's gone. There it's the reverse. At the end of the year, if you still have a nice amount, you can't say the whole thing was an expense when really it wasn't. You still have it there. You would have to make an adjusting entry to say, you know what, I'm reversing it. Some of it is was not an expense, and some of it is really an asset. I still have it. And then next year will become an expense. That is general information for now. It's we're going to review it further. And I'm going to look at the Q&A, but and that's it. We said 9:30, we're going to start the polling. I'm asking about 20 minutes to go through 10 questions. We'll give 2 minutes a question to think about it. And then we're going to go over the Q&A about 10 to 10. And we'll go on to 10:30. Maybe if you really have questions which need answering, we'll answer those. I'm going to look at the Q&A for 2-3 minutes and answer those questions. And I hope this will bring together a lot of things, and you'll understand the value, appreciate this. Okay, so let's back to the Q&A. A second here. Q&A. So this is done. We have open. Okay, so Rachel, we'll run those questions from P&L to on hand. I'll have to deal with that at Q&A. It doesn't make a difference if you work for Chon Shalem. Chon Shalem says, you know what? They went to the customer, they wanted to liquidate. You bought 100, I'll give you another 100 now. And then you'll be kicking yourself. So why are you selling? Maybe the first one was overpriced. Maybe the real price is 50 cents. So I don't know if Achron Shalom is really going to do that, but maybe they will do it at the last moment. A&H Berger has a theory about the warranty when you save it. We'll look into that. Again, this is interactive. I don't claim to know every answer as we discuss it. A lot of it is intuitive and logic, and Baruch Hashem, we're doing very good. But you could follow up on H. Berger, so that's for that. Okay, we're after 9 o'clock questions. Right there. Oh, so I realized it later, but I did not say the 225. So that's thank you for Mr. Anonymous. Again, people don't have to be so afraid of their name because you're not showing your face. But again, we're not. Okay, well, we have a second anonymous who's seconding the first. Okay, what a click purchase? Click purchase 1. McGill source for $3. That answers Rami. P&L of 76,850 on the P&L on the sales. Okay, the numbers reviewed to match up. We thought if you have discrepancies in your reports, we could go that over Q&A. Mindy Fetters asking a sale or purchase. I'm not sure what your question was. According to Fatica, so actually, by now we should have sold, I believe, 100, and if you look at the item list, 152, right? We sold 151 to Zagabai, and 1 to, let's go list, item list, we should have 48 left over here. And do we have 48? Yes, we do. Very good. We have 48. So we sold 151 plus 1. Okay, I was going to test my other theory, which is buying 6 more, and seeing if we could get over the max, but I want to get over it, keep to the schedule, and answer the questions. No, the questions posed, but something we did carry, and I noticed a question from earlier. I scroll up and scroll down, I might have missed someone. So if you feel you had a question that was not addressed, we're not ignoring you, an honest oversight, and you could be post. So discrepancies in P&Ls and balance sheets, we're going to do Q&A, because that takes more time. And it's just, it's a conceptual idea that you have a question, I've never can answer that. And I see a lot of questions about different P&Ls, and we'll see. Maybe you're right, maybe I'm wrong, and you'll tell me where I went wrong. The recording is not clear when I watched the course. I'm not sure what. I hope I'm sounding clear when I'm talking now. And I'm not doing the recording. This is actually going through Zoom. So when I'm not like recording on my computer or whatever, it's not you. Zoom is recording what you hear, and that's what they should be doing. So maybe when you're watching the live, there's a issue with your bandwidth. I do not know. You could look into that. Especially this is for MT. If you give me if you take example 1 recording and you give me a spot where it's where it's not, I'll try to look into it. Okay. Anonymous attendee again. What did I do for that specific profit and loss? Because he has income of 240 less. Most likely you don't have depreciation expense because, or you maybe put depreciation expense twice. I'm not sure exactly. But that's also a general little plug. It's called a plug number. When you offer 240 and you think a second, this is amazing accounting, but it's idea. There's only one thing that matches 240, and that's depreciation expense. So if something's off by that, you got that's where you begin your search. You take something which matches, and that's the culprit, one way or another. And you look at the report dates, because accountants' time are very valuable. Maybe not as much as lawyers, or maybe more than lawyers. Some lawyers, whatever, but some accountants are better than some lawyers. We have to zero in right away. What's the problem? You give me a number is 240, and that's the association that we make. What do you do for that specific profit and loss sheet? Again, I just made a report, again, reports. I'm doing a bunch of these same, again, duplicate questions. Same thing, Cheryl and Shmuel Rabin. If accumulated depreciation did not come up, maybe by now you fixed it already, take the whole year. And if maybe you put the debit, we did a debit and journal entry. So this is one thing I'll show you. You go to profit and loss. Because if you're not showing the accumulated depreciation, that means your problem is in the balance sheet. So we're going to find it. Go to where you know you did right. You took the expense, right? That you did correctly. So double click on the expense. And you'll bring up your journal entry. Let's see. Double click on the expense. Right? I did accumulated depreciation, but double click on the journal entry. And you'll see it was debit expense, credit accumulated. Maybe you did something else. So you could correct it and then no harm done. If you did a members drawer, members equity, that was before, just go back and change it to accumulated depreciation. This is how you, and this is, by the way, every question you learn something. So, and this is 240, that's the plug. And that would, and things would be reversed. If you did accumulated depreciation right, but you didn't do depreciation expense, you did some other thing, or you did it for a different year, right? I don't know what would have happened. Maybe you made the expense in 2019. So this year, you're not going to see the net income different. So how do you make corrections? Go to this source. Go to a number that's, again, the value of the double accounting method. This is why there's a debit and credit. You don't just enter one part, because you see what happens when you make a mistake. How would you find the mistake? You say, it doesn't match, it doesn't work, because everything has an effect. It's a cause and effect. It's like a scale, it balances. In this case, you see how the double accounting method saved us from making the mistake, whether it was you didn't put the debt credit right, you might have done the year wrong, etc. Okay. How you cancel? I'll say for now, just right click, go to the vendor. This is Mindy. Go to the vendor, go to the PO, it's a purchase order, and right click and delete it. And that's for today. We're 1 minute away from, I think we're down to the last 4 questions. My transaction and account detail. You have debit column. What do you want? Let's see. Again, if I can't get the question, we'll talk. So okay. So right now, if Rachel raises her hand, she'll be first in the call, and then after that, I'm not going to remember. So I'll go whatever QuickBooks Zoom is telling me. Okay. So again, Shmuel Rabin says offer 240. We think we answered him already. It's a goal. So raise the hand. We'll get to you in the Q&A. Right now, we're going to do polling. It's an interesting thing. I think it's entertaining. Okay. Oh. Okay. 1 second. So when I doubled, let me see, I will do that. On the by the way, on the Q&A, you'll be able to talk, and I can walk through the shared screen through your issue. So let's see, if I answer the question, if I'm double clicking, you do see my debit and credit, right? That's why I had a second screen in here. Maybe sometimes, well, yeah. So you should be able to see it. Maybe, I'm not sure what my question was. That's why I always have to have a viewer screen open on the side. And Baruch Hashem for technology of hotspots and things like that. You can travel the world and still be connected. Okay. Okay, yeah, it's okay, but this says you have 621 in the bank, I think. Mr. Fatah, we sold 152. We made one sale of 151 to Mr. Gabay. We sold 2 5-ish glick for $3. And okay, again, checking numbers. Okay, Baruch Hashem, we're close to schedule. Here's polls. Okay, we're doing polls now. We're launching polling. Okay, this first thing is polling on 4 questions. I'm going to ask, how can we navigate QuickBooks? There's 4 options. We're going to go through them. what's a temporary account? We didn't touch it. We mentioned it several times actually, but maybe you'll figure out as a hint. Profit and losses are temporary; they get wiped out. Balance sheets are permanent. Add a new account, chart accounts. How do you do that? And which of the following is not a customer transaction? I'm launching polling, and who's going to allow? Let's see, launch polling. Okay, we're going to give for part one, it's 4 questions. We'll give 6 minutes. We'll see if the results are coming in. Very good. Okay. Ways to navigate QuickBooks. There are 3 options. Showing, and you could scroll down at your leisure. You could skip a question, get back to it. Menus, icon bars, homepage, all the above, or none of the above. Oh, that's not a choice. So it's got to be one of these 4 choices over here. Let me see. Take your time. Which of the following is temporary accounts? We have inventory, we have rent expense, we have accounts payable, we have accounts receivable. To add a new account, the chart of accounts gives different options of what to do. And which of the customer is not a customer transaction. So we're getting some results in over here. I think I see the results, you don't see it. Okay. I believe people find this interactive. So it's a little sport involved, but it's educational sport. So we'll divide into 3 parts. We'll do 4 questions. We'll do another 4 questions, and we'll do 2 more questions. And whoever understands everything will be free to go on or about 10 to 10. And actually, I'm going to use this as a learning experience. I'm going to end the polling, and then I'll go over the questions, and I'll explain them a little differently. And you can see what's the questions. We're not giving people's scores results. And I'm going to explain the question why it's correct, and based on that, you'll see why the others are not correct, and what have you. So we have here still 40 plus attendees still on it. We're getting in over 20 responses already. And it's under 3 minutes, so we're gonna give it another. Don't feel pressure. Take the time that you need. I'll leave the last, and I can start Q&A. I'll leave the last polling open a little bit longer. Actually, it's only 2 questions, so I can start Q&A. However, yeah, we'll give. Based on the accounting method, you will be entitled to 8 minutes for these 4 questions. I said we're going to give 2 minutes per question. We feel that's necessary. And then the whole test is 20 minutes, and we'll be done. And then feel free to give your feedback if you feel that the time was too little, too much. On the polling. Okay, I see we have over 30 responses, and I guess some questions are submitted while some are not. Actually, I think you have to submit all 4 at the same time. And if you know that you are from the last few, do not feel pressured at all. You're only halfway through the time. I'm going to check the raised hands. But, you know, right now, for this poll, consider yourself the student driver, and someone's hunking behind you. Don't worry about it. It's okay. some people feel like I like listening to myself. I don't know. Okay, so right here we have your Rachel Lendler. Again, I'm not going to end. I'm not taking the Q&A during the polling itself. I'm going to be running commentary because I don't want to mix other people's audio. Maybe I should keep my mouth quiet. So you could think. After the poll is Q&A. So that's just, but there's 3 parts to the poll. So Mr. Anonymous who told me we have 10 questions. We did 4. Do another 4. So what I'll do is I'll explain the first 4. I'll do 2 more from the second one, and I'm not gonna, and the rest will move on. Let's see afterwards. So Q&A. Okay, let's go. I'll take another look at the polling. Let's minimize this. Minimize that. Go back at the polling. Okay, we have 80% of the votes in. So I'm probably one of the people that didn't vote because I'm logged in the second one. Okay. So I see raised hands. I see Rachel and Esther. But we're going to leave this for 5 to 10. Okay. So we're waiting for another 6 people to finish these 4 questions. And for those who need equipment to get a cup of water, or to clear a throat, or to get a tissue and sneeze, we still have 1 more minute left. We're going to give it till 8 minutes. And if you only have 2 or 3 answers, submit it. You know, better give some answers than 0 answers. Right. Okay, so I see I have a counter. I don't think you see a counter. So we're holding 7 minutes and 45 seconds. We have about 10 seconds left to go. So whoever did not submit it, if there's 2, 3 of you, just click, and if you got 2 of them, we're done. We're gonna end the polling in 5, 4, 3. Okay, statistics. So ways to navigate QuickBooks include menus, icons, homepage, are all the answer above. So let's see. How do you navigate QuickBooks? This is menus. So there's a menu tabs. Going across the top, that's menus. Icons are icons. That's over here. You have customers, vendors, employees. You have customers, vendors, and employees. Customers, vendors, and employees. And we have company homepage. Homepage, you have the sections. The answer will be correct until all the choices are correct. And almost all of you, most of you got that correct. What is a temporary account? So I actually just gave you a hint as I was running through. P&L accounts are temporary because every year you start from 0 again, right? Because we explained how the net income, okay, go to window, P&L, what happens this year? And this year I got a P&L of $240.25, right? That net income becomes my balance sheet. It's transferred over to here to my net income, and it gets swallowed in, and that becomes again part of my equity. It's an equity section. So therefore, next year, I start my P&L from zero. So any item that would come up on this list is temporary because you start from zero. So it wouldn't be advertising, wouldn't be meals, wouldn't be supplies, it would be anything that might be in P&L. However, where are we here in my Zoom? I'm back over here. Okay, but my balance sheet is permanent because it tells me what the money in the bank better not disappear, right? That's going to stay there always. Anything on the balance sheet. And by extension, anything that's an asset is permanent, right? Because what is a balance sheet? The balance sheet is assets, right? All the assets in my bank. My receivables are here. It's permanent. My assets are permanent. My receivables and my bills are permanent. My accounts payable is always permanent. It's not going to disappear. Now, we did say in the equity section, that goes up and down by revenue and expense. If I have more expenses and less expenses, that's going to affect my income. So putting equity on the side, all my assets and all my liabilities are permanent, and my previous equity is permanent. It means if I made 240 this year, right? So my P&L my profit and loss starts from zero. But 240 is permanent, it gets added to my stash from before. If I made 4 years in a row 240, now my piggy bank has 4 times 240 in the bank. That is permanent, unless I took out money for the company, my P&L. So now let's go back. Now that I explained this a little better, but I gave you a hint, go look at the question again. Would inventory qualify? No, not because it's on your balance sheet. Would accounts payable qualify? That's on your balance sheet. It doesn't appear. Accounts receivable is on the balance sheet. Accounts receivable is on the balance sheet. Rent expense, that is temporary because it's on the P&L. So whoever did rent expense, that is the correct answer. Okay. Let's go over to add a new account. So without going further, for the chart of accounts, add new. Well, that would seem to say that. I want to add a new account to the chart of accounts. That makes sense. I go to the chart of accounts and I add new. Why would anything else, without looking further, make any better sense than adding new to the chart of accounts? So the correct answer is the first one, which is not a customer transaction. Let's see. I'm making an invoice. That is my customer, correct. I'm going to give an estimate for a job to a customer. I'm going to receive a payment. I'm busy. I'm going to come back in a few minutes. Receive payments is from a customer. What is not a customer? When I get inventory, that's not a customer transaction. It's a purchase transaction. Okay, now I'm going to do polling number 2. Double entry accounting. We know double entry accounting, right? That's a debit and a credit. We just review, we saw that again in the depreciation expense and cumulative depreciation. Now, again, what would you do when you buy, well, let's sift through which of the following is recorded when a company purchases a computer, you pay cash. So there's 2 things happening. We are getting a computer for the company and we're putting out cash. So I'll give you a hint over here. What we're doing is we're getting an asset, right? We're getting a computer, but we are also taking away an asset. We're taking away cash, right? In this case, it'll be shifting assets. But you got to figure out who's the debit and what's the credit. That is the question. Okay, so that was the hint for number 1. Again, so I see people keep flashing, raise their hands. I know about those hands. I didn't forget about them. We'll get to you in about 10 o'clock. Okay, so polling is open and we'll give this. Oh, sorry. I forgot to launch it. Okay, so I explained the first question. I pull it down. The counter started now, so you explain that you lose time. We're going to give this one 7 minutes. Okay, we'll try 7 minutes for these 4 questions. Double entry counting. We bought a computer, which is an asset. We paid cash, which is an asset. You figure out what's the credit, what's the debit, and maybe they're both credits. Maybe they're both debits, right? Would that make sense? Could be. I think I eliminated 2 of the answers for you. Okay, question number 2. Sales in QuickBooks can be recorded with different ways, except, right? So there's cash, there's check, there's credit card, there's purchase order. So which one does not fit in question 2? Question 3, what is owner's equity? Is equity what a company owes? Is equity what remains after the liabilities are satisfied? Is equity what a company owns? Or none of the choices are correct? I'm going to read the 4th question, and I'm going to give you your 5 minutes of quiet time. When a customer deposit is recorded using make deposits, right? We know how to make deposits. What is really happening behind the screen, right? Because we're just doing it, but I explained to you that everything in QuickBooks is a debit and a credit, right? Whoops, again, remind you. So what's happening behind the scenes? Actually, this has 5 questions, so I'm going to give you back the 8 minutes. And I'll give you the question, those answers. And a similar variation is that when you receive a payment from a customer, what is the journal entry when you receive it recorded? So obviously we didn't do it, but we did many times Control Y, and we showed you what really happens when you put money in the bank. We did that. So again, if people feel there's something that need to go over a little bit more, again, your success is our success. We want you to go into the office with the tools that you need, or go to your own office with the tools that you can acquire, and to be able to run your business a little better. And I'm going to zip now. Like I said, I will give you 5 minutes. We're holding 2 minutes 50 seconds, and you'll hear from me about a 10-second countdown. I think I'm in a lower chair today, so make my head. Scroll down. You're saying you only, someone says they only got 4 questions on poll number 2. If it's 4 questions, everyone got the same thing. So I'm showing me poll number 2 as 5 questions. Could you guys confirm? So let me see if I can confirm here. I see 5 questions. So go down. That's for Q&A. So yeah, I'm just talking on the Q&A. Oops. Okay, so someone wants me to share the questions when I review. So I'll share results, you know, so you'll on one of the polls, and review questions. Yeah, well, I could give you a slight variation of the questions and answers in the email blast, but I have to customize what we did tonight. I will send out tonight, and you'll have it. But to send you the questions and answers, I might wait till after Yom Tov because we're not having a class anyway, and it's Yom Tov for everyone. Okay, so let's see where with polling. I'm holding, okay. We're holding 9 minutes, 10, 9, 8, 7, 6, 5, 4, 3, 2. Again, so we have here a few less results because a few people checked out of the class in general. Okay, we're ending the polling now in 9.5 minutes. Okay. Let's share results. Let's see what's going to happen. Double entry accounting. So double entry accounts means debit and credits. Automatically, you can have one debit, one credit. So the question, the first one is said you're going to have computer credit, cash credit. That's obviously not correct. And the same thing is computer debit and cash debit is also not correct. But we still have 2 people who thought that would make sense. Anyway, I see we're pretty much split on the other one. So let's, again, this is a review again. So this goes to waste. How we said it's a shift in assets, right? Cash is an asset, computers is an asset. What we got to remember is what goes up with the debit and what goes up down with the credit, right? So assets go up, increase with a debit. Assets decrease with a credit. They refer to the slides. So what is increasing now? The computer is increasing. So computer is the credit or the debit. The computer is increasing, that's choice number 4, with a debit because the asset's increasing. The cash is decreasing with the credit because you're getting less cash. So more people got the right answer on that one. So this is for review, right? Cash is not debiting because cash is not increasing. Assets is on one side. That's what we remember. I said 2 sides of the equation. you got to know, is it an asset or is it a liability? Because what happens by one is not what happens by the other. Okay, the second question. Sales in QuickBooks could be, wow. Well, can you sell with cash? Sure you can. Can we sell with check? Sure you can. And even credit card, we showed you that when you go receive payments or sell, it pops as a credit card window. But purchase orders is not a sale. You're buying. So how can you're not, sales in QuickBooks is not recorded with purchase. What is owner's equity? Owner's equity is what you owe. What you owe is your liability. What remain, let's see some of the other questions. They're correct. What a company owns assets. But assets is made of two things. Assets equals liability plus owner's equity. So what is owner's equity? Not what you owe, that's your liability. Not what you own, because the assets is also liabilities. A company owns also liabilities, but equity is not the liabilities, equity is equity. So equity is what remains after the liabilities are satisfied. The second answer is correct. Why would you say none of the choices are correct? I'm not sure why. Assets equals liabilities owner's equity. Or another way is assets minus liabilities equals owner's equity. After you take care of liabilities, you're left with owner's equity. When a customer deposit is recorded using make deposits window, so what's happening? Where's the money going to? The money is going to the bank. That's an asset. So the bank will be debited. Where's the money coming from? It's coming from undeposited funds. So undeposited funds will be credited. And the answer is your debit checking, credit undeposited. That's the first choice. Because your checking account is going up with the deposit and the undeposited funds is going out. Okay, so at least, you know, I should say the minority got the first question right, but most of the people chose that. So if you take all three together, more people got it wrong, but this is the answer that came with the most correct answer. The most answers, that is the right answer. Okay, anyway, this is all learning concepts, reinforcing debits and credits. And our goal is that by this is, you know, we can have another polling or 2 sessions. If you like it more, we can do it once a week. And when you finish the course, there'll be a, yeah, so you want to get that certificate which says you passed the course. I am not doing that test that some other company will be doing. Finally, when you receive a payment, right? You're receiving a payment. So what's really happening in the journal? Well, let's see. You had a receivable, right? The receivable was an asset for the company, the customer. When you're receiving it, you are reducing your receivable, right? The receivable is a debit. That's how you make receivables. By receiving a payment, number one, the money is going to go to undeposited funds because that's where it goes to. So you're debiting undeposited funds. You're decreasing what you could still receive from them. So you're crediting the asset of receivables. So the correct answer will be you debit undeposited funds, you credit account receivables, and once again, we have the same number of people who got the most people got that choice right. And that's for poll number 2. And there's 2 more questions, and then we'll have a little Q&A. Let's see. Okay, relaunch polling. Let's see if that's what's going on. Stop share results. And now polling number 3. And we're going to launch polling. We have 2 questions here. Number 1, what QuickBooks activity comes in this series? What happens after you enter a bill? And it gives you choices. After you enter a bill, you receive a payment, you pay a bill, you pay a deposit, or you enter a purchase order. And then finally, this I spoke at the end of the class. We didn't actually do it, but you could try your luck at number 2. If at the end of the year you see that you have 1,000 supplies unused, right? That means originally you had supplies on hand 2,500. But now we have to make an adjusting entry because we didn't use up the 2,500 that we bought, right? And in this case, I mentioned briefly there are two ways to do supplies. You can make it all an expense. At the end of the year, what's left, move it back into an asset, or make it all an asset. And at the end of the year, whatever was used, make it an expense out of it. There are two ways, but here they're saying you have on account, on hand. It means treated it as an asset. So in this case, we didn't do, you used office supplies as an expense, but they're asking if also office supplies was on hand 2,500. How would you bring office supplies up to date at the end of the year? Obviously, there's something to do with $1,500, right? You have 1,000 and 2,500. There's a differentiation of 1,500. What is a debit and what is a credit? And try your luck. Okay, and we're going to finish this in 3 minutes. We have approximately 45 seconds to go on these two questions. Okay, anyway, I realize probably the second question is a little tricky, so we're just gonna, I'm gonna end the polling now, and we're gonna discuss again the answer in this one. So a couple more, 1 2 responses. Again, I'm not seeing the names right now. I'm seeing statistics. We also have ways of seeing the names. Obviously, all the anonymouses will be anonymouses, but okay. So with, we're going to start this here and polling. Okay, share results. We have so far. Obviously, the most correct answer of after you're entering a bill will be you pay your bill, right? You receive payments is when you make invoices, you receive payments, you make deposits after you have to receive the payments. But you enter a bill, you go pay it. Now, why are you doing it? Because you want to pay. Why you entering a bill in the first place? Because maybe you didn't pay it. You had a to-do list. What you really want to do is you want to write a check later on, or create a check. You enter a bill, but if you're paying right away, you can just write a check. You don't need to create a bill for that. Now, question number 2. So I said, this person, because they're doing with a large amount of supplies, they're not taking an expense right away, $2,500. They are making office supplies asset. It's an asset. If they sold the business today, they're going to want to sell the $2,500 more, right? They didn't say we had the expense, it doesn't exist. They're trying to inflate the value of the business. So if they had an asset of $2,500, but really at the end of the year, there's only $1,000, what you got to do is take the expense now. Expenses go with a, you guessed it, expenses increase with a debit. You debit office supplies expense, $1,500. The office supplies, which was an asset previously, which grows with the debit, you take out a credit. So the correct answer will be 4. You debit the office supplies expense and you credit the office supplies on hand, which is, in other words, an asset. Okay, I think the polling was a new twist to tonight's class. I hope you enjoyed it. And we're going to do some Q&A for those who have. We have here, I think, Rachel and Esther on top of the list, if I believe. And other people could join in if they have questions. And we're going to unmute. Okay. Hello? Okay. Hello? Is that problem with the microphone? Speakers. Hello? Do you hear me? I'm not getting Rachel over here. Let me try Esther and see if Rachel's able to get in. Mute. Okay. Esther's here?
Yes, hi, you hear me?
Yeah, I hear you, sure.
Okay, so I have a small discrepancy on my balance sheet from yours. The total at the bottom is let's say the total assets is correct. It's just I have an accounts receivable. You have 1567.25 and I have 1570.25. I'm not sure where that came from.
It's $3. $3 is from Package Look. That's it. You look for a plug. What are you missing? Or what do you have extra? You're still receiving $3 because you put an invoice for $5-ish. I received the pay. I sold it to $5-ish. So, and what's your bank balance?
My bank balance.
See, I have undeposited funds. You see, I have undeposited $3, and this $3 you have it in the receivable. So I received already money from $5-ish. I received $5-ish's money, but it's not in the bank. I made a sale. You create an invoice, so you have it here.
But you have, let's say, total current assets. It has that $3, and my total current. Okay.
And that's not the same. It's you have the $3, and I by deposit funds, you have it in the receivables.
Okay, so should I take it out?
Again, we're learning QuickBooks. It's really, I'm not.
Okay, fine. Okay.
Yeah, I will tell you to take it. Yeah, I would say delete the invoice that you made for $5-ish and create a sale receipt. If we want to go together, you gotta have everything similar. But the idea is, you see, this is.
So then I entered it in wrong, like.
Yeah, because I made an invoice to Rabbi Gabbai and I made a sale to, unless 3 other people told me that they also have it, the receiver, and I just didn't say I made the sale. So then I'll change mine, but I'm not sure if that's the
So
answer
I
yet.
should put it in as a sales receipt.
What?
I should put it in as a sales receipt.
Yeah.
Okay. All right. Thank you.
No problem. Yeah, so this gives people. Okay, so that's is Rachel back on? I don't see Rachel. Rachel is raising her hand. I'm not sure why she was raising her hand. We're going to try Mr. Gold. Hello? Okay, I'm mute. Try this again.
Hello?
Hello, yeah, hello?
Yeah, you hear me?
I hear you, sure.
Okay. A simple question. Previous sheet, you say deposit 250 personal money to cover the bank. So that's a debit to cash. And what's the credit to? Members equity or
Well,
what is?
no, well, I didn't do it as a journal entry. You could do it as a journal entry. I just went to the bank and I put in 250 and I put in moving. That was moving's equity.
Oh, you're not concerned about the credit. You just wanted to.
No. That's what I'm saying is that QuickBooks. That's you know that the introduction to QuickBooks is everything is quick debits and credits behind the scenes. You only notice it when you do journal entries, but you get to understand that when you go behind when you put a deposit in the bank, you just put in money in the bank. If you do Control Y, two things happened. The bank, which the asset was a debit, but some credit happened. That credit depends what you put in the account because you have to put account. If account was receivable, then you credited the receivable.
Yeah, so this was like a loan from the owner.
Right. So you put it on equity. So
Yeah, members equity.
Yeah. So, but that's what I did. I made a deposit and I put it to what's in his equity. Let's see, share screen again. QuickBooks. But you could do a journal entry, debit bank 250, credit equity, but that makes it a little harder for you because to remember all you do the debits and credits when you need to do debits and credits.
I thought QuickBooks questioned me when I made a credit to members equity. I thought you said that's not allowed. That's the only reason I'm asking the question.
No, that was because I think you had retained earnings, either because someone made a corporation. So I said members equity by LLC is the same thing as retained earnings. It's the sum total of net income is what I make this year. Equity is what I invested plus previous year's income.
Right. Okay.
So it stays in the business. Okay.
Yeah. Okay. Thank you. Simple question here.
No problem. Okay. Sure. Okay. Let's go to Rachel on. Otherwise, we're. 1 second. If I could lower the hands. Esther was done. Mr. Gold is done. Okay. So we're gonna Rosh Hashanah. I left Rachel unmuted. Whenever you find your microphone or whatever. Okay. Shoshana, are you here?
Yeah. You hear me?
Yeah.
So I have a question. Was I supposed to make a deposit for those two things that we did today?
We didn't know. Well, one was an invoice and one was receipt payment. So someone said they made a deposit for $3 because that's what we received. We only received $3 today. But
okay, and
if you did it, then the $3 will be up at the bank, $621, but at the end of the day, it should all be the same. What we did for Mr. Gadbai, we made that it was an invoice. It wasn't.
So how come my accounts receivable at 1,570.25? And I feel like my numbers.
Because you're the same as other lady. You said you have to listen. I'm gonna do the same thing. I have undeposited funds $3 because I made one invoice and one sales receipt. So the invoice goes to receivables because you got to collect on it, and the sales receipt, which means you made a sale. I don't got to receive the money. I got it already, but it's undeposited funds because I didn't put it in the bank yet. And the person who deposited already just moved it from undeposited to the bank. So it's the same $3 could be in 3 different places. You all have the same assets. The difference is if you make the deposit, then bank is $621. and there's 0 undeposited, then it's 1567. If you made 2 invoices, it's still 618. There's nothing here undeposited, and your number will be $3 higher. It's all the same thing moving around.
I'm still confused. I don't know what I did different than you.
And I said you created for 5-ish Glick an invoice for $3 for the Megillus Rus. So
instead
of a sales receipt. So when you make an invoice, it comes receivable. Now you have to collect money.
Well, I still have 126 of inventory asset instead of 129.
Forget the inventory. You have $3 more to receive, right? You have 1570.
Yes, that means I did as an invoice.
One second. You did it. You have 0 undeposited funds, right? Because you didn't receive the money.
I don't see that. I don't have any undeposited funds.
Exactly. It only gives you a number if there's something there. So I'm telling you what the difference between me and you, and I just did it with the previous person.
I was listening, yeah.
2 people ago, is that if both you and the other person made both things an invoice. You made an invoice to Mr. Gabai for the 151, right. And you made an invoice to 5-ish Glick for 1. So you have $3 more on the invoice, and you have 0 undeposited. What I did is, and if one more person says that they did like you, then I'll say I did it wrong. I made a sales receipt. So I received $3. So the $3 extra that you have to collect, I already collected it. So that's why I have $3 less here and $3 more here.
Oh, you're saying only shows in one place. Okay, I think I understand.
Yeah. Either you received it or you didn't receive it. And that's what I told you. But no, asset is the total. The total.
I know, but you have two things here, one with the star. I never understood why you keep having 2 and I only have.
Okay, yeah. Well, we'll decide another time. That's not.
Does it make it? It's not in a different spot. Okay.
Right.
Okay. Thanks so much.
You're welcome. Good luck. Okay. Now we have been seeing a lot of talk. Unmute. Okay.
Yeah, I wanted to ask you, how come the price doesn't come up when I do a sales receipt and I put in whichever item I'm putting in? What do I have to do it manually?
Let me see. I'm going to walk through, see what I see. I go customers, enter sales receipt. Okay, and what are you selling?
So let's say the last one we did was Megillus Rus.
MR.
When I put in MK,
no,
MR.
There's no MR.
Yeah, sorry, right. MR. I meant MR.
Yeah, MR.
So for me, it doesn't come up the rate.
Okay, first of all, we'll start from the beginning. Which software are you using?
The desktop, Accountant Desktop 2020.
Accountant Desktop 2020.
The one you gave me.
Yeah. What template do you have over here? See this template? Maybe one time you change the template. I'm on a sales receipt template. Are you on a different one? Your daily summary? Or something else? See, I'm on
no, customer sales summary. Customer, on customer sales receipt.
Okay. Off the top of my head, you have account in the same software, in the same template, and you don't have rate. You don't
Unless
have
I didn't put it in correctly when I put in the item.
Wait, one second. You don't have the whole column, or you don't have the number, the amount?
I have the whole column. Just when I put in Megillus Rus, it doesn't give me right away the rate.
One second. But you have the column, right?
Yeah.
You have the column rate, right?
Yes.
You have the okay, it's fine. So now, that's why I asked.
The item list is wrong.
Of course, 100%. What I know this guy, you go to the Megillus Rus, double click, because QuickBooks is a computer. You put in the sales price is 3. Did you put sales price 3?
Only shows me the cost price, doesn't. Yeah, okay. I guess I didn't put it in. And then I just wanted to tell you, I heard 2 people ask you about the invoices. I also originally made an invoice. I understood the invoice.
You know what?
I changed.
Okay, so again, we know, but Baruch Hashem, we know what the problem is. It's $3 here.
Right, and I deleted my invoice and I made it a sales receivable, but yeah.
Yeah, okay. Again, there's always innovation, always things going on. I made this thing on the fly. I did drop down, maybe, I moved the people. People are accustomed to do the same thing. They didn't invoice. So I'm not told myself, as I said, it could be I made a mistake myself. But the result is the same. assets as long as people are in the same place. Okay, go back to the participants' chats. Okay, so you have any other question?
No, thank you.
Okay, thank you. So,
Thanks so much.
no problem. To everyone, actually, not just to you. We wish Kabbalah Sateh b'simcha b'pnimius. If anyone has a question, you see, I made an allotment for Q&A, and we finished all Q&A even in a short period of time. People that have individual questions, now is the time to ask. It's easier when we're talking than to already, and we're here to ask you a question as opposed to typing something, which obviously is asking me to give a whole explanation. We're here. The time is now. The place is here. There's the forum. And even if you could be anonymous, isn't that the best part? In an email, I'll know who you are. And here you're anonymous, disabled talking. Okay, so okay, Rachel Randall, we'll try one more time. I'm hoping not to sound too much like a talk show. That's not what I'm trying to do. Okay. So I elaborated on that one. Am I in YouTube video? Wow, I hope. Am I out there? Why can't, maybe I could be anonymous. Be an anonymous teacher. Okay. I'll try Miss Judy. I see you here. So it's unmute. I keep clicking it 3 times. One more time.
Can you hear me now?
Yeah, I double clicked and then didn't respond.
Okay. In the beginning of the class, you gave those 3 or 4 examples. It was very hard to follow you because you didn't send it to us in an email.
Okay.
So is it possible for you to send these things out so it's easier to follow you in the class?
I will try to do that in the future.
And the same thing like with the first set of the poll questions. When you're talking, it's hard to follow the answers if you don't see the questions in front of you.
I got the comment, and that's why in the second 2 polls I went over it.
Okay, now are you going to, for the beginning of the class, are you going to send us the notes?
I'm going to send out the transactions we did today, which was we purchased from 2 people, we received from 2 people 100 goes for us. Obviously, we created an MR, we created a new item. We put a sales price and cost price of $1 and a sales price of 3, and then we adjust. I'm telling you, but I'm going to put it on.
You're going to print it out. Okay, that's what we need.
And I'll send it to you.
Okay, then I can see if my numbers match up to yours. Okay, thank you so much. We wish you to have a good Yontif.
Amen. Thank you very much.
Thank you very much.
All the best. Okay, so if no one else has any questions, then wish you a good Yontif, and I'm going to end the class. Hatzlacha, Rabbi.